Hi everybody, I am Jenny Palo and I am the owner of Whole Human Financial and also a private practitioner doing therapy with adults, and I am a approved clinical supervisor. So for today, I'm just operating with kind of that financial coach hat and wanted to share a few things that might help you with doing your taxes. So I have this kind of demo up and running. We're going to just start by looking at things that you'll want to be doing throughout the year. So let's say that I just started my private practice in 2024, and here is my accounting information. I'm going to move myself so you can see the numbers more. And if you like the way that this looks, you're welcome to purchase your own copy of this so you can just kind of follow along and get the basic ideas out of it. And then from here, we're going to take this information and transfer it to what we do with our taxes. So deposits go in, and then you see here I had to pay for my liability insurance, so that goes in there. And then there's Psychology Today, and I paid for that. With each of the expenses, you'll see I have this drop-down kind of menu. You'll see here some transactions that have to do with rent. So I do not just have an online practice, I do have a physical office, and it's actually a suite of offices. Nobody else wanted to sign the commercial lease, so I went ahead and did that, which means now there's a couple other people that rent office space kind of sublet from me, and then I rent the whole space and have to pay the commercial company. So this isn't my real information, but it's just sort of a demo to give you a sense for what this might look like for you. One thing that you're going to want to have is something that shows you, okay, for each of the categories, how much did I end up spending all together? And so then that's what you see here in column I is the actual kind of sum totals for each of the categories. So here, if you scroll all the way to the right, you'll get for the entire year, here is what I spent, about $23,400. You have a net balance when you take the service revenue of about almost like $103,900 dollars that you earned, and you take away the $23,400, you're left with $80,000, almost $80,500, and then the rental income is $6,000. So we are going to kind of keep this all months data handy, and then we're going to start doing taxes. First, we're going to go to Schedule C, and I've left my name here. So you'll put your name, you'll put your social security number, and then for Schedule C, you're going to put your type of business and the code. I use the cash method of accounting. Did you materially participate in the operation? Most of us in a private practice, we're doing the work day in and day out. And so a lot of times we would say yes to that question. Every person is unique and different. They have different situations. I can't speak for you. I did not acquire or start this business. You'll only check that box if this was the year, this tax year was the year that you started it. And then did you make any payments that would require you to file Forms 1099? So if you, for example, have a consultant that you are paying to help you in your practice, and if you pay them more than $600 for the year, then you should be issuing them a 1099. And I didn't pay any one person $600 or more, so I don't need to do a 1099 for anybody. I'm going to say no, I didn't. And now we're going to look at the income. So the gross receipts or sales. And in my case, the answer is $103,900. So that's what I'm going to put here, 103,900. Gross profit is going to be the exact same, 103,900. So then the final number is still just 103,900. Okay, now part 2, expenses. This is where we're going to go back to our spreadsheet. Now I say marketing, that says advertising, but my total that I spent for the year is $359. So $359. Insurance other than health, so I do have insurance. There it is, $1,000. Legal and professional fees, so I have that under professional, 1,057. Office expenses, we're gonna say $295. No pension and profit sharing plans. And if you do something like a SEP IRA or a solo 401k that you give just to yourself, you would not put information in line 19 of Schedule C. You would put that on a different spot on Schedule 1, and I'll show you. Other business property, this is where I'm going to put the rent that I've paid out. So $10,800. Repairs and maintenance, right, $633 is what I had to pay for that. Supplies, I don't have any other supplies besides the office supplies. Taxes and licenses, so for that I use the organizational. So this is like when I had to pay to get my license renewed. Travel and meals, so I do have a little bit of travel, $500 worth of travel. Now, if some of that travel was meals, then that would go under deductible meals, but you can only deduct half. I didn't pay any wages to anybody. And other expenses, if you go down to here, the taxes don't count for this part. They're going to be looked at in a different part of the tax forms. So we'll need to know what we paid in taxes, but we're not going to put that on Schedule C. Training was not covered. So we're going to go back to Schedule C, and it was $690 that we spent on that, right? So there it is. Okay, and everything else is covered. Oh, and then banking for $57. And so these are allowable expenses. I couldn't include just anything. I can't put like clothing that I bought for work, you know, the gas that I have to spend or miles that I put on my car just to commute from home to work and back. If I'm just going from home to an office. However, if I go and do home visits and I see clients in their homes and I'm going all over the place that way from one client to another client, I can count the miles that way. We're just going to say the total other expenses are going to be $690 plus $57, so $747. I'm going to go back here to where it says total expenses. Where was it? Oh yeah, there it is. $747 for other expenses. And now on line 28 of Schedule C, we're going to take all of these expenses that we just put in, we're going to add them up. And 500 and 747. So I come up with a total of 15,551. Then the tentative profit or loss is going to be where we subtract line 28 from line 7. In line 29, we're going to take that 103,900 that we made in profit, and we're going to subtract the allowable expenses that we have denoted here on Schedule C, and we're left with $88,349. Now, here's where, if you want to do the home office expense, that's where you would do it on line 30. And there's different methods that you could use to figure this out. I'm just going to keep it simple, and I'm going to say I'm not going to do the home office deduction here. And the total is just going to be that 88349 for us. It's just basically the exact same thing as what we had on line 29 because we didn't do anything on line 30. So now we are done with Schedule C. Schedule E is not going to be something that everybody has to use. And again, I didn't pay anybody $600 or more to where I'd need to give them a 1099. And so I just answered no to both of those. Type of property for me is a commercial property. Rents received. There's nothing else was spent. There's no expenses. $6,000. Total rental, real estate, and royalty income or loss. It was just a straight $6,000 for me. And then here's where you have all these other potential things that also get put on Schedule E. If you have an S corporation, you see here, or a partnership, and then you get a K1 from those, and then you have to plug in information here. All we're doing is page 1 for a little rental property that we had, and that's it. Now we're going to go to the self-employment tax, Schedule SE. So none of these things are applying to our more simple situations. Net profit or loss from Schedule C. So that is where we go back to Schedule C. So again, it's saying Schedule C, line 31. So we go back to Schedule C, go to line 31, and you see here the amount 88349. We take that and we put that right here, 88349. Then, if combine lines 1A, 1B, and 2. So it's just 88349 again. And then if line 3 is more than 0, yes it is, you're going to multiply it by 0.9235, 590. Okay, and if you elect one or both of the optional methods, enter the total of lines 15 and 17 here, and we're just not doing that. Combine 4A and 4B, and if it's less than 400, you don't have to pay self-employment tax, but ours is more. Okay. You just end up with the 1,881,590 again. So if you made more than whatever amount is listed here, then you do a little extra thing to change it, but we don't have to worry about that. Okay, so let's say that it was 120,000, and let's just say that that's because I have a spouse that worked and made money. Maybe I had a little bit of a job where I was an employee or something. So we have W-2s, and there is some money that would go on to that. You will see that box 3 is where they're going to have your Social Security wages listed, and your employers are going to fill that out for you, so you don't need to worry about it. If you also have tips, that would be on box 7, and again, it would just be right there for you. And so you would take all that, and on this Schedule SE, you would add boxes 3 and 7 together and put it there. So then you add lines 8A, B, and C, and we just have 120,000. Subtract line 8D from line 7. Okay, so then here, this is where we're saying 160,200 minus 120,000 is 40,200. Okay, 40,200. Multiply the smaller of line 6 or 9 by 12.4%. If you don't care, don't worry about it. Just do what it's instructing you to do. So if we look on ours, there's line 6 and there's line 9. So line 6 is the 81,590 and 9 is 4,200. So we're going to multiply 4,200 by 0.124. 4,985. I'm rounding it up to the nearest dollar. Multiply line 6 by 0.029. is 2366. So now, self-employment tax, add lines 10 and 11. 985 plus 2366, and we get 7351. Okay, so that is the amount of self-employment tax that we have to pay. That's how we figure it out. And then it says here we're going to put this on Schedule 2, line 4, or 1040 SS Part 1, line 3. Self-employment tax, put that here. By Part 1, we might not have anything. Part 2, we might only have the self-employment tax. Part 3, we might not have anything else. And then we just add everything together here on line 21. So that is your total other taxes. And you enter it on Form 1040, line 23. So I'm not going to go through this whole thing, because if the only thing you have is self-employment, then when we go to line 1040, here it is. Nope. When we go to line 1040, when we finally get to that, you can see on 23 other taxes, including self-employment tax from Schedule 2. Okay, so you would just put that there. And we're going to do that in just a little bit. Okay, so now the thing is, they let you take half off by 0.5, and we get 3,676. So now that is what we're actually going to put for the tax that we have to pay. Okay, so we're done with Schedule SE. So now we get to go to Schedule 1, and this is where we put it all together. Business income or loss. This is where we go to Schedule C, and we say line 31. That's our business income or loss. We put this on Schedule 1, line 3, 88349. There's line 3, and we put it there, 88349. Rental real estate royalties, attached Schedule E. So we have Schedule E, and we know it's 6,000. But just for you to be able to see, Schedule 1, line 5, right here on line 26 of Schedule E, it tells you where to put it next. So line 5, we're going to put 6,000. Total other income, add lines 8A through Z, 0. But combine it all together, and that is your additional income that you're going to put on line 8 of 1040. So this is where we're going to take the 88349 and add the 6,000. We get 94349. 94349. Okay, so now adjustments. If you are an educator, you can take up to $300 for classroom expenses. Let's say that my spouse is an educator, and yep, we're going to go ahead and take that. Deductible part of self-employment tax, attached Schedule SE. So that's where we're going to go back to the self-employment tax, and it's going to tell us enter this on Schedule 1, line 15. So 3676. There you go. 3676. Now here, if you do not have employees and you just have a retirement plan that you are doing for yourself, and you had some money that you put aside for yourself, you can put that here in the adjustment to income. And then that will let you take some money off of what you have to pay in taxes. And then self-employed health insurance deduction, we'll just say we didn't have that this time. Okay, so for line 25, we didn't have anything, so it's just a 0. And then you're going to add line 11 through 23 and 25. And for us, that would be 3676 plus 300, so 3976. 3976. it tells you here you're going to put that on line 10 of 1040. The next form that we're going to do is a good one because this one is your qualified business income deduction. So the qualified business income or loss, and this is where we had the 88349 from Schedule C, and we had the 6,000 from Schedule E. So put all that together, and 88349 plus the 6,000 is 94349. Then there was no loss carryover from the year before for this. Put 0, and the total is 94349. And then this is the part that we can multiply by 0.2, which is 20%. So then 18,869.8. So we'll say 18,870. Okay. Then we didn't have any kind of real estate thing going on. So all these things that say REIT dividends and this and that is all just 0 for us. So now you're going to add lines 5 through 9. And for us, it's just the same thing as line 5, 18,870. And then I just added this little asterisk for myself. There's instructions you can go and look at yourself, but I just, to save time, what you have to do here to get line 11 on this form, taxable income before the QBI deduction, is going to be line 11 minus line 12 on form 1040. Okay, so we haven't done 1040 yet. So here's your regular form 1040, and we're going to start filling this out. I went ahead and looked up the instructions for the other form that we were just doing, form 8995. And when we go to line 12 and it says see instructions to figure that out. So here you can go to, I just went to the instructions for form 8995 to line 12. And here you can see for us, we're going to go to line 3A plus net capital gain on the form 1040. And that's where we're going to get this info. So if we go to line 3A plus net capital gains, qualified dividends on line 1040 plus capital gains. So we're just going to have to fill this out and then we can see if that applies or not. Here on line 1040, this is the kind of big enchilada that we always have to fill out every year, and this includes all of our personal stuff as well as the business stuff. It starts off with kind of the demographic information that I'm going to leave it off. You'll just put, it's pretty self-explanatory. So you have to figure out your filing status. I'm putting married filing jointly. And then it has a question about digital assets. Then it has questions about if someone can claim you as a dependent, you or your spouse. And then basically other questions about your age and blindness, because that changes what your standard deduction could be. So we're just going to say none of those things apply and we're going to skip over it. And just for the sake of keeping things simple, we're also going to say there's no dependents. So there's nothing else to enter. We just skip straight over to the information that we might have on any W-2s. And here, of course, if I had W-2 information and so did my spouse, we put it all together, and let's just say it is $120,000, the same as what we put on one of the other forms. It may not be the same, but we're just gonna put that for this illustration. We didn't have any household employees. No tip income, no Medicaid waiver payments, no taxable dependent care benefits, no employer-provided adoption benefits, wages from Form 8919 we don't have, nothing from other earned income, and non-taxable combat pay. No, we don't have anything there. We're just going to say no tax-exempt interest. Adding up lines 1A through 1H, we're going to say 120,000. And then let's say we have nothing. Let's say we had $100 in taxable interest and $300 in ordinary dividends. So now there's nothing for a taxable amount of IRA distributions or pensions and annuities or Social Security benefits because we are not doing any, we're not drawing any money out from retirement places. On line 8, we need to put the amount from Schedule 1, line 10. And it's 94349. So we put 94349. And now we got to add things up, right? So we're going to add 1Z, 2B, 3B, and 8 to add 2, 14, 7, 4, 9. And then we're going to put our adjustments. So that's line 26 from Schedule 1. So here we had 3976. We're going to subtract line 10 from 9, 210,773. Then we have to figure out, are we going to take the standard deduction or the itemized deduction? If we're going to do itemized deductions, then we have to fill out another schedule, Schedule A. We're just going to, for simplicity's purposes, say we're going to take the standard deduction. And for married filing jointly for 2023, we could take $27,700 in a standard deduction, plus that qualified business income deduction. So that's where we have to go back to 8995. And here we got to figure out a few things. So now we have the info that we need. Let's go to line 11 minus line 12. So line 11, 210,773 minus 27,700 is 183,073. Okay, 183,073 is the amount there. Then your net capital gain, if any, increased by any qualified dividends. We didn't have any of that, so we're going to say 0. We had ordinary dividends, but we didn't have qualified ones. Subtract 12 from 11, so then we just still have 183,073. So then the income limitation, multiply line 13 by 20 times 20% or 0.2, so 36,615. Okay. And qualified business income deduction, enter the smaller of line 10 or 14. So the smaller is going to be the 18,870. So 18,870 is what we're going to do. We don't have any loss carryover. We say 0 for that. We don't have anything for line 17 either. You're going to put 18,870 on 1040. 18,870. Okay, and then you're going to add lines 12 and 13 together. You get 46,570. Okay, and so now you get to take the amount on line 14 and subtract it from line 11. Okay, so 210,773 minus 46,570, and you get 164,203. Here on the second page, this is where we figure out our tax. You just go to, for every year, the IRS is going to have a publication for you. Don't worry. And it's going to have your tax tables. Now, there's instructions here on what you have to do. Basically, when you go to your tax table, you're going to see here that you have different options depending on your filing status. If you're filing single, married filing jointly, etc. We are saying that our tax status is married filing jointly. So, what we have to do is go to line 15 of 1040 and look at what it is, and then go to the appropriate spot on the tax table. So it's 164,203. So we got to scroll down a few pages to get there. To go to the married filing jointly box, you're going to put it in here, 164,203. And then it tells you what to do. You're going to take that 164,203 and multiply it by 22%. 36,125. Then you have to subtract 9,385. End up with 26,740. So now that is the amount of tax that you have to pay. So you put that here, 26,740. Then this is where the amount from Schedule 2, line 3, we don't have anything. We just get the same amounts, 26,740. And then other taxes, including self-employment tax. So this is where you could go to Schedule 2, or in our case, we don't have anything else to put on Schedule 2 other than our self-employment tax, which is the 3676. So that's what it is. Put it in there. Then we have to add the tax that we got from the tax table plus our self-employment tax, 3676, 30,416. 30,416. There you go. And now let's say that from our W-2s we had, and let's say that we didn't have any tax withheld from any Form 1099s. They usually don't. Other forms we don't have. We had estimated tax payments that we paid. If we go back to our original thing here that we were looking at the very beginning, I have those taxes here. We paid $7,850 in estimated taxes. Now, if you paid some of those taxes to your state and some to your federal, we're only looking at the federal here. So let's say that $7,800 was paid to feds, and then $50 was paid to the state. So we'll just say $7,800 was paid here to the feds in estimated quarterly payments. So that's what we already paid. Then we don't have any earned income, child tax credits, Opportunity Act, nothing from Schedule 3. So now we just add everything together. What did we already pay plus any credits that we can receive? For line 32, we add 27, 28, 29, 31. We didn't have anything. Those were your kind of refundable credits and everything. We didn't have that. But if you take 25D and 26, we don't have anything for 32. But so 37,800 is what we already paid over the year. So now we overpaid $416. So we overpaid by $7,384. And so that is great. So we want to have it all refunded. So refund it, please. And then we can put in our checking account information and have them send it to us. Let's say that we only had 21,000 plus 7,800 is 28,800 that we paid. Now what we have to do is say, okay, well, we owed 30,416. We already paid 28,800. So we have to send in $1,616. and hopefully we don't have to pay any penalty. If you're doing it yourself, you don't have to put anything for third-party designee. You and your spouse, if you're filing jointly, need to put your names, signatures. If you have identity protection PIN, you got to put that there for both you and the spouse. And then nothing if you don't have a paid preparer. That's it. Now you can turn that in to the IRS, and that's how you file, or that's how you prepare your taxes to then go ahead and file. Now, and you can use something like Free Tax USA to file if you want, or there's TurboTax, there's Tax Savage, there's all kinds of options there. I also wanted to just show you Form 1040-ES. So this is here to help you figure out your estimated taxes. So after you've already figured out your 1040 information, you can enter your expected income, profit subject to self-employment tax. We would say from Schedule 1, line 10 with 94,349 stays the same, 94,349, and then multiply it by 0.9235, the 87,131, and then you're going to multiply that by 0.029, 2527. Okay, and then Social Security, this is maybe going to look slightly familiar to the Schedule SE. The Schedule SE was used to actually figure out what our self-employment tax was for that whole year. And the ES is used to help us figure out ahead of time what our quarterly estimated payments would need to be. So enter your expected wages, and then that's where we put 120. There we go. We have 48,600, and then you got to enter the smaller of 7 or 3, 7, 48,600, and multiply that by 0.124, 6,026, and then add lines 4 and 9, 8,553, and then multiply line 10 by 0.5, 50%, and we get 4,277. If we're just doing this to kind of guess for the upcoming year, we can use this and we basically say, okay, so that would be the total amount that we need to pay in self-employment taxes. Then you can use this worksheet to try to figure out what your line 15 would be on 1040. This is having you go to what you think your AGI would be. AGI is going to be line 11 on your 1040. And then deductions, you end up on this worksheet, line 3 is going to be the same thing as line 15. Line 4 is going to be line 16 on the 1040. So let's actually just go through this, okay? So we already did the 1040. Now this, for last year, for 2023. Now this year, we're looking at what we think we're going to have to pay in estimated taxes for 2024. So the adjusted gross income we expect to make in 2024, we can just go back to 2023 if we think it's going to be similar, and we can go to line 11, 210,773, and then deductions. So here we can just use the standard deduction, 29.2. Okay, so here we can go and put 29.2, and then if you can take the QBID, enter the estimated amount. Again, we just use last year's 18,870, and then we add these up, 29.2 and 18,870, get 48,070. And then we're going to subtract 48070 from 210,773. 162,703. Okay, so now we have to figure out our tax. You can use the tax rate schedules, which are just above it here, right? So we said 162,703. So then we go here and we say, all right, we are married filing jointly, and 162,703 is going to be $10,852 for tax plus 22% of anything that is over 94,300. We get 25,901. And we're not going to worry about alternative minimum tax. 4 and 5 is just 25,901. Credits, let's say we just don't have any credits. And so we just have 25,901. We have self-employment tax, and if it's, what we calculated from up here, it'd be 4277. Add lines 8 through 10. You get the $30,178. Put 0 for line 10. Put 30,178 for 11A. And then earned income credit, additional child credit, lots of refundable credits listed there. We're not eligible for any of them, so we just put 0. So then your estimated tax is 30,178. Okay, so then we're going to take 30,178 and multiply it by 90%, 0.9. And that gives us 27,160. The required annual payment based on prior year's tax. So what you would put for 12B, it depends. If you make over 150,000, then you have to pay 110% of last year's tax, or 90% of what you think this year's tax is. So last year's tax amount that you paid or needed to pay was 30,416. 30,416 times 1.1 is 110%. So then that would be $33,458. $33,458. So here I just pulled up publication 505. It goes through a lot of different things. One of them is on who has to pay estimated taxes and what does that look like. And you can see here the general rule for 2024. If you expect to owe at least $1,000, you can either pay 90% of the tax you think you're going to have to, or 100% of what you paid in 2023. There is a special rule though. If you made $150,000 or more in 2023 as a married filing jointly, then you have to pay 110 instead of 100% of what your taxes were. So that's where I got that information. And required annual payment to avoid a penalty, enter the smaller of 12A or 12B. And so the smaller for us is 27,160. That's what has to get paid in order to avoid a penalty. And income tax withheld or estimated to be withheld, W-2s. So let's just say we expect the same amount, 21,000, to be withheld as was last year. So then when we subtract that 21,000 from 27,160 is 6,160. 14B, subtract 13 from 11C, 9,178. And it is more than $1,000. So we're going to say no. So go to 15 to figure your required payment. If the first payment you're required to make is due April 15th, enter a fourth of it, minus any overpayment. So that's where you would say 14A, 6,160, and then times 0.25 is 1,540. So 1,540 is what you need to pay by April 15th. You need to make these payments by these dates. the dates adjust a little bit each year, so that's what it was for this year. And you can keep track of it here. Okay, I paid my $1,540 on, April 15th, 2024. Let's say that, we did our 2023 taxes. We used those to then figure out estimated payments. Here we are. Here was the check number that we paid with, and the amount paid was $1,540. No overpayment was applied, and the total amount paid was $1,540. You can do this through the ETTPS system. You can get more information. So for federal payments, you can do it all online. And then you'll also need to figure out your state, which I'm not doing here. Every state is a little unique, but it's got information here on how to make these payments, and you can have these little slips that you use as vouchers, and that's it. So now you have everything all set up and ready to go. I did this all for 2023 and then going into 2024, so you'll need to do this for 2024 going into 2025, but the process should look very similar, very much the same as this. So I hope that helps you to get started. And then I guess the last thing that I'll just let you know is if you are needing help or wanting help, you can go to Whole Human Financial and you can contact me there. It'll pull up a contact form, fill it out, I'll reach out to you, and we can talk about any other questions that you have. Thanks so much.